stuff that we can look at to get an indication of where this market may go. Ash, what are we looking at today? We're looking at seasonals, we're looking at fundamentals, looking at COT.
Yeah, so we're going to look at the COT data for the Australian dollar and the dollar. I think it's going to be important to touch on, as Julian's just covered, quite a few things with the dollar, and the dollar really is on the move, and it is a very, very big story right now. Obviously, the announcement of taper seems to be something that the market is focusing on, but I think the S&P is actually probably more important as a potential driver for the dollar. But let's just have a look at the Australian dollar, and mainly because it is now at the maximum level for the COT data to show that we should take some serious view on buying the Australian dollar. Index 36 at 100%, index 18 at 100%, index 6 at 100%. So that's 36 months, 18 months, and 6 months, respectively, all saying that the commercials are very bullish on the Australian dollar. Longs increased last week by 13%. The shorts increased by just 7%. When we go over here to the seasonal charts, this is suggesting that actually the move in the Australian dollar might still be a little bit early, and a bottoming out is much more likely when we hit the start of October. I think there's probably enough of a level of error around this area to say if there is a decent buy signal on the Australian dollar, given what we've got with COT data. If the fundamentals can start to agree with it, then I think that an Australian dollar long may well trigger a little bit early. When you think about some of the other things going on with Australia right now, it's probably questionable that that's the case. So I think I'd want to see some other bits and pieces line up before I start to say, let's get in here. I quite like the Aussie dollar, but as I say, looks like October is the best possible timing for us if we are going to be in accordance with COT and if we're going to be in accordance with the seasonals. Now, coming over to the US dollar, the picture on the US dollar is more interesting in many respects because I agree with Jules about the US dollar. I think that the US dollar probably does have some more upside to it. I don't think it's about the taper thing, but what we are starting to see is numbers that are suggesting that there is an economic slowdown in the United States. And initially that would start to point towards, the potential for taper talk effectively to come off the table. So, you'd start to maybe say, well, the dollar could weaken off the back of that. And it may as we start to play this out. But initially, what we're seeing is the S&P suffering as valuations are so high. We've seen valuations in the S&P high for quite some time. The data and the surveys are effectively saying, don't expect GDP to continue at this current rate. And if that's the case, then businesses will suffer. The businesses survive inside the S&P, and the S&P probably will start to come down. And what we saw was when those numbers started to come out, we started to see the dollar start to pick up. So the COT data in the near term, the 18-month and the 6-month, do not support this particular theory. Now, the one caveat is that this is recorded from Tuesday to Tuesday. So I'm going to be really interested to see whether there were some dollar longs initiated between Wednesday effectively and Friday, or Tuesday and Friday from last week, because the University of Michigan Sentiment Index came out and basically stated, this is one of the really good consumer numbers. It came out and effectively stated that growth is going to be a little bit more sluggish. So I'm looking for this COT data to start catching it up. And I think it's okay to wait for it. I don't think we need to go early. If we come over to and look on this on the longs, negative 26% from last Tuesday to the previous Tuesday in the long positions. Shorts started to increase by 8%. So this is not suggesting that we should be looking at long dollars in the longer term. Even the 36-month is saying 25%, which is anything 20% and below that suggests selling the particular currency from the commercial traders. Now, if we bring the seasonals in, then we get a slightly different picture. The seasonal suggests that around about the third week in September, we do start to potentially rally into October, take a dip, but then rally right the way up until the end of November. And we're getting very close to that particular time frame, or if we're not going to be in it next week. So the seasonal suggests maybe some dollar longs could be on. COC data is not keeping up with it as yet. But there are kind of other indications that suggest that that some safety taken within the dollar are probably on the cards as well. I will finally look at the S&P because the discussion we're having really is about what's happening with the stock market and how it's spilling over to the currencies. And COT data is fairly benign, 45%, 45%, and 19%. So near term's a little bit weaker, but generally speaking, it's relatively near the 50% mark to say that there's nothing really to see here. And as Jules says, September, pretty dour, generally speaking, particularly towards the end of September. October doesn't really fare too much better either. So we could be headed for 6 weeks of potential downside, potential sideways price action. We're not, in accordance to the seasonals, headed for another rally during this period at bare minimum. So all these factors are suggesting that some weakness in the market could entail, and some potential strength in the dollar might be supported by that. That doesn't point us towards the Aussie dollar long, incidentally. So the COT data may well need to stay here and get stuck here for a while for us to be able to take advantage of it. Right now, looks like it's a bit early.
Cheers, Ash. So Aussie dollar longs in the wind, but not just yet. Looking for the right signal and the right timing for that, right?
Yeah, it certainly looks that way, mate. It looks like the global slowdown may not play into the hands of the Aussie dollar at this particular stage. So doesn't mean the COT data is not useful, but it's basically saying maybe be ready and make sure that this data stays where it is when the terrain changes a little bit. And if it does, then we can start to have a bit more confidence that with the commercials. But I don't think jumping on board with the commercials yet would be wise.
I get that, Ash. Interesting stuff too, because the seasonal, while it goes down, it's got a pretty good rally after that. So what I think we're saying is that the commercials have got in early, and they can afford to do that because they got big stops and big space, right? They can just hold through. But if you're a retail trader, maybe you're looking for some stronger reversal signals. It's quite a big move in the Aussie if you can time it right?
I think you're right. Yeah, I think that summarizes it really, really well. And yeah, the seasonals don't match it yet either. It's certainly looking at the what we've got here. Sometime in October looks better.
Right. Well, we will hold out, and sometime in October we'll see if we can make a few dollars out of it, mate. Thank you very much for that, Ash. As always, great to get your view on